Good evening. Or should I say, well. Bitcoin, huh? Word on the street says that Bitcoin is now coming back to macro risk. What do we mean by macro risk? Well, we're going to talk about it in tonight's live. But tonight's live is for the holders. There's an important range right now that is being tested, which is going to solidify that the bids, the guys who are buying up the Bitcoin, are going to hold their stance and maintain this price point. Or are they going to think, you know what, Bitcoin could be a little bit more cheaper. Let's wait for it to pull back just that little bit more. It has been a wild day today, ladies and gentlemen, especially in the marketplace. NASDAQ and S&P pulling out some behavior. VWAP to VWAP, vector to vector without fail. JP Morgan misses its estimates. That's putting weight on the marketplace. And you know that the big banks are going to be turning around to to Jerome Powell and saying, please, bro, stop making these interest rates stay high. Well, today's data has pretty much solidified that the Fed is nowhere near looking like it wants to cut interest rates. Unemployment, 209,000. Retail prices going up. Sales. That's what we mean by macros. Tonight's live, we're going to break it all down and explain it all. Going to talk you through some trading I did today. And I've got a really sore throat. Drying my mouth out, just drinking coffee, trying to stay awake. Witnessing Bitcoin pull this madness. But I hope the holders were able, in principle, to exercise the 420 method. If you are new and you're wondering what's the 420 method, it's just a way for you to distribute your capital at specific points when Bitcoin drops, not when it rises, when it drops. Today, we had an opportunity to load up on the 20s. We also could be exploiting one of the 40% moves. If you are new, I'll be making it all clearer for you with a little bit of an introduction to the 420 method. The guys that have been here for a while that have been hearing me talk about this, just bear with it, man. We might have some new people checking into the pattern watchers. And with that being said, if you are new, make sure you do like the live stream and subscribe when you've taken enough information that I'm able to provide for you. And make sure you hit the ding-a-ling. That would be the bell. I'm not going to say the next bit after that because I did that last night and I looked like a right idiot. Anyways, good evening, chat. What's good? Let's get with the program, man. Here we go. All right, then. Excuse me. So, what's been going on? Sell your Lambos and buy Bitcoin. Someone said it in the chat not so long ago. You don't get rich buying Bitcoin, you get rich selling it. That is so true, man. So true. But you'd have to buy it in the first place. It's like that joke where the guy's praying to God, please let me win the lottery. Please let me win the lottery. Okay? Prays to God every single night. He wants to win the lottery, and he's been praying to God for numbers and numbers of years. Anyway, he passes away. He goes and meets God. And he said, I got one question for you, God. Why did you never let me win the lottery? And God simply said, you never played. Now, that joke can be told in very different ways, okay? Without, those who know the joke will know, all right? That's a funny joke. Anyways. Fed gets more reasons to delay interest rate cuts. Now, some of you have been saying that, Tina, can you just stick to the charts and not focus on the macros and the news? Well, we need the news to understand exactly what the mindset is of the a la retail trader. What is retail looking at? How is this information right here going to dictate where things are going to end up? Well, let me just bring something to you. Today, we shared for our Platinum members. We shared the logic on the euro and for crypto, gold, oil, And it was all on this logic here regarding the dollar dominance, okay? The dollar dominance is so important, okay? One way or another, Bitcoin will follow the dollar dominance if it's sticking to the idea of macros or macro risk, okay? If BlackRock is buying so much Bitcoin, well, when the macro risk starts to come into play, that means anything that could be affecting the macro environment, which affects money, then dollar dominance is going to be the first thing we need to pay attention to. We had anticipated that dollar was potentially creating this W formation with the logic of it getting ready to make a reversal back up. Now, we had a setup right here for the euro with two instances. Now, this is the problem with the setup. It was around news. Now, when it comes to news plays itself, it is very important, but more so, easier for you to trade when the news is out, not before. Now, I have to cater for the people that might be trading before the news announcements because there are people that do that. But the logic was that if euro was going to rise to the upside on the news announcements or beforehand, then we would have been anticipating a move up towards the Asian high. But I stipulated here, wait for the 1 hour candle to close below Asia to run shorts, okay? And this was on the logic of the macros of the dominance forming this W formation. We go over to euro, and here it is. You waited for the 1 hour to close below Asia, which is right here. Your entry would have been inside of this range right here, and your target would have been yippee-ki-yay to the downside. Did we achieve the target fully? We went down towards this area right here, the 10900, was it? Actually, we actually took down near enough. No. Yeah, the range daily low. We actually went down towards it, I believe. 10900. There you go. Took out the range daily low all the way down. So there was success with that setup right there, ladies and gentlemen. Okay. Going into gold. Gold was doing the same story as well. So we go and have a look at gold. And you can see gold. It was a bit tricky with gold, but it did come down to make a little bit of recovery back up. So happy days with regards to gold. And I hope you took advantage of it, Marcus. There's oil right there. We'll have a look at oil. Oh, my days, man. Oil just, we wanted to see a little bit of a retrace, but they just went for it. And when oil goes up, the stock market goes down. This is an example of the macros, okay? Now, we're still waiting for some setups to come into play with BTC. However, we go into Bitcoin right now. What an interesting day. What did we say about this zone, especially for the holders? We had stated that this is an area of big interest. There's that psychological range yet again. Now let's just go into the daily time frame for the holders. We have had our first breach of the 5 EMA. We had an attempt towards the 13, but price came back up. Holders, this next daily candle is critical for Bitcoin because it's either going to be trading lower to recover this wick or it's going to reverse from this point to try and climb higher. Now, in regards to the macros themselves, you can see with the data that's come out, retail sales is a little bit down, PPI is up. Core retail sales a little bit down, but the core PPI is up, okay? Now going over to Bitcoin, macro risk is returning to the market. US economic data on Thursday has sent interest rates and the dollar higher. We now need to go over and have a look at what is impacting the macros. Go over to the yields. Where we at? Well, yields are moving up. Okay then. The bonds going down. If they're not buying government bonds, it means that they're not seeking the risk. And that's low risk. Okay? That means they're doing one of two things. They're either going into commodities or they're sitting in cash. There's your W formation on the dollar. The foreign investors are now starting to turn to the dollar because the yields are going to start climbing up. This impacts Bitcoin greatly. Because if Bitcoin is going to try and continue to move back up, then the proof of the macro going in line with Bitcoin means that if they do decide to sell off Bitcoin more, which is not really a sell-off, bid Bitcoin, this next zone is Bitcoin's ultimate support. This area here at 60K. Okay? Very important. But it's all going to be about this logic right here. When will the bids come in to protect their positions? But what we don't know is if the guys here have sold off. Now, when we look at the chart, you can't really see that many offers coming into play now. You might not think it's valuable enough. They might not want to sell it yet. Looking at the profile, we got a nice stack at 82,999. So there's interest to sell Bitcoin. 61 million at 94. Going into the 100K, we got 29 million. Bitcoin on the daily, or should I actually know? Let's just go to the 8-hour chart, because remember we're speaking about the 8-hour chart. Bitcoin has not even tapped the 50 EMA once. It's not tapped it. And that was back in February, okay? Not once. And I said it before. The sweeps down and back up are designed to mark Bitcoin higher, okay? Now, if the macro risks do come into play, tomorrow's data, if the Empire Manufacturing State Index comes in and shows that the manufacturing sector itself is expanding, that means they're projecting for a negative reading of -7. If it comes in at +4 or -3, so it's actually improving, then the economy's okay. So the Fed might not want to hold interest rates. They might want to cut them. But then when consumer sentiment, which an article came out not so long ago, I'd say, well, I spoke about it 3-4 days ago. It had said that consumer sentiment is saying that inflation is horrible right now, and they expect it to increase even more. So if the consumer sentiment is already anticipating that inflation is hard and interest rates are difficult, and it's hard for them to do that every day and buy the eggs and the chickens and what have you, the crazy thing is, this sentiment indicator, based on consumers' mindsets about the inflation, pretty much is going to tell us that inflation is going to go up. So if this comes in lower, then it means that people think inflation is going to go up. So they think inflation is going to go up. So the market will then price that in. It's crazy what they use this data for. Absolutely crazy. They ask 500 consumers. They're asking 500 people, man, what they think of the economy. 500 people. Really? Is that your sample size? And that bit of information is going to, as a high impact news reading, is going to dictate where money goes. That is wild. Absolutely wild, in my opinion. But it will move the market. So this is what we mean about macros impacting Bitcoin. And in the back of our minds, we're like, oh man, I just hope Bitcoin can hold out, man. I really do hope. I mean, looking at Bitcoin on the bids and the offers, look, this behavior right here, you can see that when you get this sort of activity in Bitcoin, it's consistent with bids coming in to protect. They're loading up on Bitcoin on the back of retail traders getting liquidated in their longs because no one wants to pay themselves. And I can prove that to you because the liquidation points are right here. Wow, what a screen. So sorry for the people that are sat watching this in the dark. Oh, even better. Let's just sign in. Here we go. Happy days. Oh, actually, we'll just use this one instead because you take forever. Look. 72,858 is the current price point there or thereabouts, and we're seeing more short liquidations available than we do have with the longs. Quickly verify that. Go to the liquidation heat map, And we'll understand where we are with regards to Bitcoin's behavior. So those short sellers are like, yeah, man, told you, Bitcoin's going to drop it. And this back and forth between the guys on Twitter, all right, about you said this, you said that, shame on the bulls, shame on the bears, ha, ha, ha. Come on, man. Why do people need to be like that? Everyone's in here to try and make a penny or two, all right? If you're bearish, you're bearish. If you're bullish, you're bullish. So what? It doesn't change the fact that Bitcoin will do what it needs to do. And when your impression of bearishness or bullishness is put onto the charts, then you have every reason to say, yeah, I told you so kind of thing. But what you've got to understand is the way Bitcoin's behaving is it's all about accumulation. There's clear manipulation right now. They're stacking up this ETF story right here. And check this tweet out by a gentleman called Rajat. Forgive me if I'm not saying your name properly, but Rajat Soni, okay? Listen to this. BlackRock holds, okay, 215,625 Bitcoin, up 11,800 from yesterday. At the time of this, it was done yesterday, this post, okay? And now it holds 1% of the total supply of Bitcoin. Valued assets at 15 billion. This is important. 900 Bitcoin are issued per day, and in April, this will drop to 450. And BlackRock clients bought 13 times the newly issued supply yesterday. Okay? It can only make sense that Bitcoin is going to keep on going higher based on the pace that BlackRock is going at. Okay? But what you've got to understand as holders is if you are in line with what's going on macro-wise and where we are with in terms of interest rates, okay, and how the Fed is going to behave in relation to whether they should be cutting the interest rates or not, that's going to give you the heads up over the longer period how likely Bitcoin is going to pull back to reflect that so that more people can buy it at a discount. And then that's where you come in and start loading up on Bitcoin as it's retracing. Holders, you technically should be encouraging Bitcoin to pull all the way back down, even into this zone. Remember, I've marked it off for you. This vector candle region. I want to see Bitcoin pull back towards the 65K zone. Because that would be a healthy retrace, because then that would mean it would be triggering these bids down here. All right? 32 million at $66,288. All right? $32 million. So 500 Bitcoin nearly. All right? That's nothing to be, you don't want to dismiss that. But what we really need to see is if this area is going to be taken. Look, you can see there's clusters here. Clusters of orders. 29 million at 65,785. Go up a little bit more. You had 21 million at 65,776. Okay? 60, sorry. Go up a little bit more. You got 16 million there at 65,980. Move down ever so slightly. 21 at 5. Yeah, I've already done that. 32 million at 66,288. Go up a little bit more. Anything else? No. And then we've got 7 million at 67. So again, this is a zone that we are really wanting to pay attention to. And if Bitcoin doesn't come down to that point, then what happens in this range is critically important, because we don't want to miss out on these guys bidding Bitcoin. So we're going to make the assumption that as long as Bitcoin holds this point, if it does start to try and pull back again, we're going to anticipate these guys to come in. Because what you've got to look for is this. When you're looking at the Bookmap, you can see how these orders are distributed. If I expand the chart out, oh my God, my throat. If I expand the chart out here, guys, right, you can see that we've got orders top side over here, and you've got orders down here at 70,000. You've got a stack of them all the way at 71, 521 Bitcoin orders. Okay, so those are sellers, all right? Down below, we don't really have that many bids visible in the current range. Zoom out a little bit more. Here we go, 69,000. We've got 213 Bitcoin orders. Move down a little bit more. Just clear this here. And yeah, I need to reset my computer because that is just taking the mic. Never mind. But the idea is that the liquidity we want to see it appear up here rather than down here, but do not discount the fact that they could bring it down here, okay? If this is the first attempt by Bitcoin to mark lower, then tonight's open, the new daily candle, will be the deciding factor. So what I'm saying to you guys as holders is you now have an opportunity in principle to load up on the 20. Now, the 2020-2040 principle comes into play in a few seconds, right? Because of the news today, you can see the impact of the stock market. And this is what I mean about Bitcoin and its behavior. Again, going back into the macros, right? Here's the S&P. Now, S&P and NASDAQ, they were very, very tricky today, okay? Very tricky with this behavior. We've got red vector candle right there. They've come back into the same zone they reversed from, which happens to be the same zone that they reversed from today, okay? My trading today, so I'm just going to introduce this to you so that, and then we can work on this 420 method for anybody new into the live stream. Let's just click this stuff here. Let's just refresh that. Okay, there we are. And here we go today. So I do this every time. Where is it? Here we go. All right, so this is my trade. I've taken a screenshot because I can't zoom in with this stuff right here, okay? But what I've got here is, for anybody that doesn't know, is I've got several funded accounts with Apex, and this is my trading for this week, okay? So this is where we are. Today, I took a bit of a loss today on my accounts. I ended up losing, I think it was around 10 grand on one of my funded accounts, and I lost that account. So I lost 10 grand on one of my funded accounts, but then on the other accounts, we managed to make it back up. Now, of course, this is this 398 trades is not today. Today's trades are right here. Okay, so collectively, this right here, this account, 76, that account there was down $4,500, and we managed to then recuperate that up, and I finished it off on a loss right there. Look, the fees ate me alive on that account. We ended up finishing minus 87, but the fees took it to 481. But we did well on our other funded accounts. We finished the day roughly around $32,000, which then brings our balance for all our accounts to 81,000. All right. And there are our funded accounts there. So now what I'm going to be doing is, now that I'm finished trading for the week, I'm not trading tomorrow, and then we'll start again next week. But today was a really tricky day for trading, man. It was really tricky trading the S&P and the NASDAQ. I was only trading the S&P. And the way they were just playing off these VWAPs continuously was actually phenomenal, okay? That it was just very tough. Look, they were just playing VWAP to VWAP to VWAP to VWAP. It was absolutely wild. And it was taxing. It really was. Especially when you're scalping frantically, trying to catch moves, okay? And I'm looking at the tick chart and the depth of market, and you're having to pay attention to the way the orders come in, and you're just there zoomed out continuously. It can knock you for six. I don't expect anyone to be trading like that with Bitcoin because A, you won't have the depth of market, which gives you enough data. The Bitcoin futures markets, that's on the CME, is limited. It has terrible inflows of liquidity, and there's a lot of spreads in those futures markets. All right, so I can't trade that on the futures. But with the way the S&P and the NASDAQ behave today, and Bitcoin has fared very, very well, in my opinion, this area here is good for Bitcoin to try and mark up. But we need to see commitment from the bids inside this zone. Now, how do we know it's going to be good? Well, I've got vector candles that they can come back into now based on the way they're holding price right here. So for holders, going on to the 8-hour time frame, you need to be paying attention to Bitcoin and be loading up principally on the 40-20 method, 420 method, which I'm going to talk about right now, inside of this range. As long as Bitcoin can stay within this range, you can then commit the 20-20-20-40 method. Now, how many of you are new passing through that do not know what the 420 method is? Goodness. How many of you don't know what the 420 method is? Just type 1 if you don't know what the 420 method is. And whilst I'm waiting for that, and you are typing that, make sure you are liking the live stream, ladies and gentlemen. And earlier I shared you the Platinum Trade setups. If you want to take advantage of that membership, there's 20% off. Just use the code BULLRUN at the checkout, and that code is pinned to the top of the chat, and it's in the description of this video and this live stream. Just make your way over to tradersreality.com, and you'll be able to get access of that discount, okay? So, I performed my first 420 today, Tino. Happy days. Okay, that's good. These are all the new guys. You don't know what the 420 method is. Man, this is nice. We got new people passing through. Welcome to the Pattern Watchers. Let me introduce to you the 420 method. The 420 method is pretty simple. So not to bore anyone that already knows it. Your capital is going to be split in percentages. All right? 20%, 20%, 20%, 20%, 40%. These 3 20% are your working capital. So you got 10 grand, 20%, 2 grand, 20%, 2 grand, 20%, 2 grand, 40%, 4 grand. Equates to the sum of $10,000. The idea is that your working capital is going to be the amount of liquidity from your capital that will be the longest in exposure. Okay? That means if you watch today's live stream, okay, that was this morning, you would have had an opportunity to load up your first 20. You would automatically be in profit from it. Okay? The idea behind the 20, 20, 20, 40 is like this. If we look at it from a patterns perspective, when price is rising to the upside, on the assumption that Bitcoin is going to continue this narrative and keep moving up, for every retrace lower, depending on the depth of the correction, you are going to commit 20% of the capital. And you're only going to be sticking to 3. So you've got 3 20%. You've got 3 $2,000 balances, okay? Your goal in principle is to only pick up the Bitcoin or distribute that 20% as price is pulling back. So right now, if you then look at price and say, okay, then 20%, I've already put that in right now. I'm in profit on my 20%. Happy days. What do I do? Well, I think Bitcoin could come back down. But I want to keep that trade open because I think it's going to go to 80K. I'm going to wait and see if Bitcoin can drop, because what's the worst that can happen? Bitcoin doesn't drop. Your 20% increases in value. All right, naturally, you won't have that much exposure, but fundamentally, your DCA at that point in time has netted you a return. Fantastic. That's the whole point, yeah? To make a return. Say Bitcoin hypothetically were to drop down. Now it's come back into this 65,000 point. You look at that and say, oh my God, okay, cool. I'm gonna load up. There's another 20% right there. Okay? So now you've got 2 20s. Now you're waiting. You see Bitcoin inside of this price point right here, and you say to yourself, you know what? I don't think Bitcoin could actually continue lower. Let's make the assumption that it does, okay? And it does continue to drop, but it doesn't drop too far. Say we find support at this 61 zone right here. Well, you've got your working capital, so you'll then drop another 20% inside of that range. Then you stop. You do nothing. Why do you do nothing? Because you want to factor in the idea that there could be a manipulative move where Bitcoin just simply collapses. Okay? That's where the 40% comes into play. The 40% is the amount of capital that spends the less amount of time exposed. The 20% stay the longest. How you play these 20% is up to you. You can split them up, because by 2020, you have got 3 attempts to load up on a DCA principle. If you divide it out, you have 6 attempts. So 10%, 10%, 10%, 10%. And you can do it like that. But always have the 40% free. Why? So you can prepare yourself for things like this. Say you witness Bitcoin. Look, this is on the 8-hour time frame, right? If we go into this candlestick right here and find the point that it reversed from, you'll understand that there's 8 hours in this candlestick for you to make a decision. So let's just do that right now. Let's just go to the point where it reversed, okay? Now, you might be thinking, what's this guy talking about, man? Like DCA and like he's talking about it in the past. Tell me that Bitcoin will never do this again, then I'll call you the master of the markets. Because it will do this again. It's been bloody doing it all week. Look, once, twice, 3, 4 times. It's been doing it all the time. You can't tell me that they won't do that again. But I know when you leave this live, you're going to be fully prepared. You ain't going to be there like, oh my God, my Bitcoin slumped. You ain't going to be saying diamond hand. You're going to be saying, right, I got my 40%. That's an opportunity for me. So let me explain to you how you could incorporate the 40% of the remaining of the capital you've got. This is on the 8-hour time frame. Drop down to the hour time frame. Zoom out. Where was that point where that candle reversed? So that's at this point right here, which technically put Bitcoin at 59,000, okay? When you witness that, the candle closed up here. You've just witnessed a sharp move to the downside. Now, by the principle of the hybrid system, you would be fully aware that this candlestick is behaving like a stopping volume candle. The next candle confirms it as a stopping volume candle. Now, you're thinking, what the hell is this stopping volume candle? Go to tradersreality.com. There is a course free of charge, and it's on a black screen like that, but then it materializes into something like this. And it's a course that I explain to you what the stopping volume candle is. You've got to become a bronze member, which is free of charge. If you leave today and never come here again, and you install this hybrid system, which is free to install, please take this course. There are paid courses which are there for the sake of convenience. If you don't want to sift through 1,100 videos on YouTube, take one of the paid courses, which is one's $149 and the other is $70, okay? You ain't breaking bank with that because you're going to either pay that in fees or you're going to pay it in a loss. One way or another, you're going to do one of those two in your trading regardless, okay? But those courses explain to you the idea of how to utilize it in trading terms, okay? But this course is for the hybrid system, guys. The holders should be watching this course, this free course here, because it explains everything that I'm going through right now to help you understand where to incorporate the 40%. I don't mention the 40% or the 420 method on that course, okay? That's just a methodology from Jesse Livermore, who was the best Wall Street trader on earth, in my opinion. You know, he was short when the Wall Street crashed in 1929 and the banks were knocking on his door. You heard me say it yesterday. Banks knocking on his door saying, please stop shorting the market. He was short on the 1929 Wall Street crash. What a guy. As a holder, when you witness something like this, this is where you put the 40%. So hypothetically, if you are going to incorporate the 20-20-20, you would have done 20 here, 20 here, 20 here. They would have been stayed in the chart. You would have loaded up 40 at this point because you believe the short term says that this is an opportunity to grab Bitcoin on the cheap. You expose the 40% until you can at least generate a decent enough return on that capital. And if it were to work in your favor and come back up all the way to the red vector candles, you would have made yourself a handsome return on that 40% and you'd be in profit from your 20-20-20s. You close that 40% and put it in the back. Never leave it too long exposed to the market. Now, you would have to catch a really significant move. And of course, relative to your relationship with risk, it's up to you if you decide to leave it in there. But you pretty much got 100% exposure then. What do you do if it all goes to pan? What happens then? Then you're going to be playing the diamond hands game where you're just going to be hoping Bitcoin keeps on going up and it doesn't keep dropping. The idea of the 420 method is to get you active in making decisions and allocating capital at specific points in the chart. You can be a trader and trade the monthly time frame. You're just making one decision a month, okay? You can trade the weekly time frame. You're all traders. You can say you're holders and not a trader. Well, what do you do when you buy Bitcoin? You've initiated a trade. Just because you're holding it and not making a response or a decision for another 2-3 months, you're still a trader to me, okay? That there, ladies and gentlemen, for the new guys, is the 420 method, okay? It's about distributing your capital evenly so that you can sleep at night. Now, if you got 10 grand and you put 10 grand in Bitcoin from this current point right now, and that's all the amount of money that you've got to put into Bitcoin, and you put it here, well, you know, that's you. But when you can systemize your approach, then you're going to be able to think about it logically. You ain't going to come to the chart and be like, oh my God, I've lost money. I can't believe Bitcoin dropped. Well, if you only committed 20% of it, you'd be in a better position, because then you're like, now I've got money behind me. What if it reverses from this point? Happy days. If it reverses from this point, I'm going to grab myself a nice return. And the problem is when you're committing too much liquidity into a trade and you don't give it any leeway, Bitcoin drops down, hypothetically, like this. Say Bitcoin's dropped. Say you went long from here, okay? All your capital is in Bitcoin at this point. Looks stupid, doesn't it? Yeah, it does. From that point, Bitcoin's down here. Now you're praying it goes up. So you've effectively missed out a potential for a full recovery. Well, if you're going to wait for it to go up there and you end up seeing it go to that point, I bet in the back of your mind you're thinking, if I only had a little bit of a penny or two, I could have put in some money right there and I would have netted myself a nice return. Welcome to the 420 method. The 420 method gives you that option to react. Okay? If I'm in a drawdown on a position, okay, I think it was today. Where is it? Let me just pull this up. Which one was it? Which account was it? Is it this one? Okay, here we go. It was on this account right here. I remember it specifically. One of my trades. No, was it? Yeah, okay, no, it was this account here. This one, look how busy I was on this account. Oh, my days. Right. So I took it was $87 loss, but it was originally around $4,500 loss on that account. Okay. So what I effectively done was I closed the trade at a $4,500 loss. The time that I closed the trade, because it was in a drawdown, okay, I was at a point where the S&P was looking like it was going to reverse. So what I decided to do, okay, was close the trade, open again at the point that I closed, duplicated that trade into another account that had more leeway, because I hadn't lost on that account, used a little bit more size, and capitalized on the move back up, which then netted me the return of the account. And then it was on this account where we made 10 grand on that position. Okay? That's what I do. If I'm in a drawdown on a certain account, and I've gone long, hypothetically, I thought it was going to be a bounce from the 50 EMA from here, for example, and then it collapses. Well, that account's in a drawdown. Quickly open another position on another account that's fresh, that hasn't had any drawdown, okay? Load up the long from there, make a fat return on the way back up, break even on that account. I've made money on the move. But that's because I've got the flexibility to do that, because I have more than one account. Having more than one account gives you the benefit. Having more capital behind you gives you benefit. And it's these instances like this where when you commit, so some of you as leverage traders might be thinking, right, I'm going to open up a leverage trade on Bitcoin, 100x, chuck 100 quid on that, happy days. I've got $1,000 behind me. Well, your $100 is going to get wiped. Let's face it. So you have to be very considerate when you're using leverage, all right? So say you drop down your leverage and you're only using 5x, for example, and you play this same principle. On that 5x, only commit 10% or 20% of the account. Chuck 20% into it, let it do its thing. You've got another 40% in working capital, and you've got the big bad boy 40% behind, okay? Bitcoin does this, okay? Your position is in the negative over here, But now you've got capital behind you to load up because you've been watching it for a little while and you've noticed how they've been moving the chart. There's a bit of a reversal coming into play. You see vector candles, stopping volume candles, whatever other systems you may be using. You then say to yourself, you know what? I'm going to go in for the flavor, take the long, build up the position from here, use a little bit more capital to try and recover the loss from this move right here. Happy days. It makes the river. Even if you were to catch it on the low of the New York session, okay, at the close of this candle and you went long because you saw the stopping volume candle right there, which happens to be the same stopping volume candle right here, which happens to be yet another stopping volume candle right here. I'm not even going to repeat it anymore. You will load up at 40% of the balance. You'd be in very good profit. Take that profit out. You've just now alleviated the loss of that account, of that position up there. Does that make sense? I hope it does make sense. Please tell me if it does make sense. You can never understand what I'm saying. Please tell me if I'm helping you understand what I'm saying. Please tell me. Please tell me. Are you guys understanding this? I've got a comment here. Hold on a second. Kirchmeiler. Right. Oh, Harry Potter. What are you doing, bro? Sorry, guys. Sorry about the super chats. Here we go. Solana will accelerate 10x with Fire Dancer update with Google and Visa as official validators for the first decentralized smartphone app store. Okay, cool. Thank you for that. You're confirming my move today. Okay, very clear, loud and clear. I thought we were taking a break. Okay, excellent, wonderful, 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 wonderful. I have a short Solana stop. 176. What do you think Solana will do? What will Solana do? All right, listen, I'm going to put it out there to you all. There's no reason to short right now. Straight. There's no reason to short. Leverage traders, when I say short, okay, as leverage traders, you know, we are the degenerative gang, like, you know, we're the crazy people. There is every reason to short within reason, okay? But the problem is people start shorting Bitcoin and behave like a holder. Now's not the time to do that, in my opinion. Even if Bitcoin were to drop, hold on a second, I'll get to Solana in a sec. Even if Bitcoin were to drop all the way down to 58, from 70 to 58, you would have caught yourself a wonderful short. Congratulations. Just take some money off the table. Because the same way it can aggressively drop down is the same way it can aggressively come back up. Because Bitcoin were to drop down to 58K, those short sellers will be convinced and they will never get rid of their short because they'll be reliving the past of 2021 bull run and be like, yeah, man, I caught the short at 70K. We're in a different time right now. There's too much accumulation happening on Bitcoin. We did not have the same accumulation in the bull run before. Facts, okay? Tino, do you think they will go down to the other wicks? Well, look, hold on a second, hold on. Out of today, we see this behavior. Bitcoin down, Ethereum down, and because of the Ethereum Denken upgrade, Solana benefited. These guys that upgrade Ethereum, it doesn't work, man. It's pointless. How can a Solana do better than Ethereum on Ethereum's upgrade? Well, there's probably a method, there's a reason for it, but Solana naturally is a cheaper platform anyways. But when Solana's moving and Bitcoin isn't and Ethereum isn't, that does give us wind to understand that meme coins could be getting accumulated or there's lots of activity on the meme coins, okay? But in relation to Solana itself, it has done fantastic to hold at the 50 EMA. Fantastic. Brilliant. However, Solana is somewhat extended to the upside. But you know what I always say? Give me a reason to get rid of my position. If it hasn't broken down below the 5 EMA on the daily time frame, I have no interest in believing Solana is going to come down yet. Okay? I have no interest. That doesn't mean that Solana is never going to go down. You just haven't been given a reason to think it is. Right, if you want to play the game of what it could do, Well, then you're going to go over to Twitter. You're going to try and find out what is someone saying, what's he saying, what's that saying. And you'll play that game. You'll then try and create this self-fulfilling prophecy that Solana must go down because you're in a short. No. As long as you know your exit point and you are content with that and it's not going to break bank and you're going to lose your whole balance on you getting liquidated. See, don't use liquidation points, guys. Please don't. These people right here, up here, these are liquidation points. And they will allow price to go to the liquidation point. That's stupid. Don't want to do that. If you've got a liquidation point, say you went long on Solana, okay? Here is your entry, right? Hypothetically. Here is your stop. Here is your liquidation. Stick to that. Because you could effectively change direction at this point and then ride the short lower, hypothetically. That's what we would assume could happen. But never use your liquidation point. Never. What's the point? Now, if you're using, look, if you're using a specific amount, it's like when I take trades on crypto and I'm using leverage, I'll be risking like $500. And my liquidation point is like, $500. I'll let it hit the liquidation point of $500. If I've got like 5-6 grand in my account, I ain't going to put all that into the margin to the point where my liquidation will wipe my whole balance off. No. My liquidation point is the amount of money I'm prepared to lose. You see, a lot of people will put their balance in to protect their trade. In the end, they get liquidated and they lose their whole balance. It's not what you want to do. Liquidation points for leverage traders, if you let it hit, then you have to assume that the margin that's in that account is gone if you let your liquidation point hit. But if you're using high leverage and you're not really using that much liquidity to open the trade, your liquidation point is not too far away from any position of a stop, realistically, or your entry point. It's like your liquidation point on low margin and high leverage has already been set for you as a liquidation point, but not a stop kind of thing. See what I mean? What I'm saying to you is if you're using a lot of margin, do not let it go to your liquidation point because that just blows your account. At least commit 20% and be content that you're happy to lose 20%. That way you're not going to get all messed up in the chart, all right? And start adding to margin. And that's the big problem, I think, with a lot of people that are using leverage, okay? Yeah, this is what it is. Can you look at Phantom? Same as Bitcoin. Now below the 5 EMA. If you're going to take this 5 and 13 EMA principle, okay, you need to wait for tomorrow's candle to close. Can you do that? Hodlrs, the same thing with Bitcoin, okay? You need to wait for tomorrow's candle to close to show you if you should start loading up the 2020 principle. Go back into Bitcoin. It's doing good, man. The fact that it can get back up above the 5 EMA is huge. That means what? That means that you see these wicks, okay? Prepare yourselves for this. See this wick here, and this wick here. You are effectively having to absorb that Bitcoin can come and recover each of these wicks. This is your wick range. This is where the bids get tested, sweep, come back up, shift out. Okay? You have to have tolerance for that. All right? Is he Greek? Yeah, man. Of course I'm Greek. Isolated. Isolated, in my opinion. I ain't no king, bro. I ain't no king. Here we go. Tino, can I ask you a genuine question? I plan on starting to trade futures and trade markets on trad markets. Do you think algo is better there and it's easier than crypto markets since... Oh, on traditional markets, sorry. Okay, so the question is, from PFI, Peffy. Huh? Tino, can I ask you a genuine question? I plan on starting to trade futures on the traditional markets. Do you think the algo is better there and it's much easier than crypto markets since they are extremely unpredictable? Listen, all the markets are unpredictable, okay? Just cryptocurrency moves a little bit faster. Well, in my opinion, Bitcoin is slow. That's the fact. All right? When you're trading the S&P as a scalper, see this flavor right here? This is beautiful. This is what I'm trading all day. Look at that. Perfect curvature away from the VWAP. Beautiful. And this is the S&P. I ain't even going to talk to you about the NASDAQ, how mad she is. Oh, my days. Look at that. Up, down, up, down, up, down. Easy exploits, in my opinion. But I've been watching these assets for quite some time, and I've exposed myself to quite a bit of screen time to understand how they move. Okay? For anybody that's going to start stepping into the legacy markets, Forex fundamentally works on value. How do we understand today's move? Well, today's move was news orientated. How do we understand that the principle of the dollar was going to start coming up, formed a structure, plus the logic that Forex operates on value? How many euros can I sell to net me lots of dollars? Do I earn more dollars on the back of a strong euro? That's value right there. So they've been buying euros. The value of the euro has increased. The value of the dollar has decreased, but they're picking up dollars. Now, with the euro being so cheap, as it's pulling back, I am selling euros to buy dollars, thus getting more dollars in return. That's what this swap game is all about with Forex, okay? That's what goes on every day in the Forex markets. And they stick to that narrative all the time. You know where you stand with Forex. Cryptocurrency, someone just needs to go onto X and say something. In my opinion, Bitcoin is going to succumb to, I think it's going to come to a certain type of regulation soon, where if Bitcoin were to drop aggressively at some point, listen, ARK, yeah, BlackRock, Grayscale, all these ETFs from all these companies, all right? These are big players, all right? Like there is in the NASDAQ and the Dow Jones. If the stock market were to ever correct 7%, everything shuts off. I'd expect the same thing for Bitcoin because they have to protect it. It's like a fail-safe, you know, with the idea that how much liquidity is going into cryptocurrency, that is. You can imagine that we get to, like I said before, Bitcoin cryptocurrency will go to a market cap hypothetically of around $4 to $6 trillion. It has the capacity to go there. Just look at the inflows of the ETF. That's just a sweetener for you, okay? But imagine in the next 10 years, we see market cap of cryptocurrency around 5-6 trillion. That's a lot of money, ladies and gentlemen. And you think Bitcoin's going to drop 50% in 3 days? They won't allow it, in my opinion. They'll stop everything to prevent that from happening on that day. I think that's where it could go, honestly. What's this? What's this? I'm a long-term Bitcoin DCA. Okay, here we go. I'm a long-term Bitcoin DCA, sorry. I'm a long-term Bitcoin DCA. I can't even read, bruv. We'll start again. Benjamin G, thank you very much, man. I'm a long-term Bitcoin DCA and holder. But 2021 trading, quick gambles with microcaps wrecked me. Folks, Tino's advice regarding market maker tricks, moonboy influencer BS, and not being whale food is truth. Mad love to you, Benjamin. Ultimately, if you can leave this live with an understanding of how this game operates, not, oh, Bitcoin's gone up and we got to look at our rainbows and we've got to look at our divergences. Don't get me wrong, they do work. They have their place. But I'm talking rainbows and all the madness that follows it. Bring it back, all right? Bring it back. You want to understand, now that cryptocurrency's got Wall Street, you want to understand where money's going to be coming from. Focus on the dollar, focus on oil, focus on the yields so that you can improve the odds of a play working in your favor. If the yields are going up in one instance, look, the yields have been marking up today, all right? That hurts the tech market. Well, just look what NASDAQ did today. Slump. That hurts the tech market. All right, it came all the way back up again, but that's how the tech market works. That's how NASDAQ operates. Fill the bids, offer them out. But the yields were going up. So if you ran a short from the start of the morning, the second the Asian session opened last night, the narrative of the yields rising over the last couple of days came into fruition, rolls it over. There ain't no on-chain analytics that are going to give you that, because there's no on-chain analytics for Wall Street. These are your on-chain analytics for Wall Street. Take that information, all right? Bond market, $130 trillion collectively, all right? Forex market, 7.5 trillion daily turnover. Big boy markets. And everyone's dancing around like a clown because Bitcoin's over $1 trillion in market cap. Hey. It's tuppence to the bigger picture. So logic would say you want to look at where the big money's going to justify if Bitcoin is going to get purchased by these big players. It's the only thing, in my opinion, that's going to work. Tino, if we look at open interest on Bitcoin prior to today's tumble, it was lower than now. Is it likely we'll recover the wick, or could it be shorts open interest? Well, there it is right there. So open interest on longs right now is down 7%. Open interest on shorts right now is increasing. It's up. ETH open interest 0.9. ETH open interest shorts 0.04. Okay. So let's just go over here. Move this. There we are. Where are you? Come on, perpetual. Let's go futures, sorry. And let's go to open interest ratio. No, not this one. All right, so this is the open interest right now. We're starting to see it pulling back. So some longs could be closing off their positions. Okay, because what you've got to be mindful of with open interest is when you see it starting to rise as price is dropping, okay, you can assume, right? So for example, if price is dropping, okay, price is going down, then you start to see open interest to rise from here. It's going up and price is starting to go up. That's not longs coming in. That's short covering, okay? That's why you'll see it move up. Then you'll be like, yeah, man, we're going long and this move, happy days. Short covering happens and then it just goes back down again, all right? Ideally, open interest for longs needs to happen after a significant move to the downside has occurred, all right? To give people a reason to start believing it's going to start coming in, because open interest is borrowing money off exchanges, opening leverage longs, okay? Well, we've had that. We're exhausted with that right now with cryptocurrency, okay? And they paid the price for it. So we're now waiting for effectively the reset, in my opinion. Does that make sense? Here we go. All right, if you rather miss the boat than make a bad trade, but missing out on gains I'm seeing this year isn't fun either. It is what it is. That is what it is. It genuinely is. But I always say this, and I'm going to leave you with this, okay? There is nothing else or no analysis that's going to make the move work in your favor. There isn't. You've just got to take the trade, because that's going to give you your analysis. You know you're right if it goes in your favor. you know you're wrong if it hits your stop. If you're having to chase a position, all right, ideally traders, if you're having to chase a position, you're wasting your time. You're better off closing it, changing direction. MACD bearish cross on the daily ETH chart. Okay, so MACD bearish cross on the ETH chart. Okay. So this is the problem with MACDs, in my opinion. Higher time frames, MACDs do serve a purpose because they're factoring so much more information. As a day trader myself, I'm never looking at MACDs ever. When you're looking for moves to the sum of this, going long from here and closing here, that is not anything for me. There ain't no MACDs, no nothing. I'll trade from VWAP to vector. That's it. That's my strategy. VWAP to vector. And at best of times, if I've caught a nice move without a vector, I mean, fine. You know? Let me just have a look at the position. Just give you an example. Where were we? Here we go. Here's an example. I went long on the S&P at 5,203, okay? And closed off 5,218, all right? No MACDs. And that was $5,203 from this area here to all the way up to this area here. Vectors and VWAPs. All right? So this is to the VWAP. Go to the S&P. Quickly, just to put it into perspective for you. Vector, vector, vector. Went long at this point here on the red vector candle, failing to break the 50 EMA. Continuation out to the VWAP. That is all I do. There's no magic science to it. It's just waiting for the bold move. The vectors give you the clue. Okay? Screenshot. Screenshot this, ladies and gentlemen. Now let's give you... You could have that. Yeah, you could use that. Yeah. Oh, it's reset. Okay. Ugh. Let me just do this. Oh, God, there's no point. Just use those ones there. Screenshot those and take the entry points, okay, on the S&P futures. Or just literally study this chart. Wait for the green and blue vector candles to appear at the lows of after a move. Green vector, green vector. Wait for confirmation. Happy days. Red vector fails to break it. 50 EMA test. Look on your scope. VWAP's nearby. Volume weighted average price. Buying ES contracts on the cheap. Reversal to the upside. Ladies and gentlemen, listen. Mad love and respect. Again, make sure you like the live. Hit subscribe on the way out. Hit the bell. And I'll be checking in with you all tomorrow morning. Have a good evening, gang. Peace.